Hello and welcome to Policy Watch, the show where we bring you the week's biggest business stories and join the dots to unravel their impact. I'm Surabhi Upadhyay. The week gone by witnessed some very interesting corporate and policy developments. The government finally seems to have gotten third time lucky in successfully auctioning off telecom airwaves. Consumers of CNG and PNG in various cities had reason to rejoice as the centre announced significant cuts in the price of gas. And finally, the government has also announced the constitution of the 7th Pay Commission. We discuss all of these stories with our guest on the show, Himangshu Watts, who's senior editor at the Economic Times. Himangshu, it's great to have you in the studios. Thank you for taking out the time. Well, let's first up start with Telecom. The numbers look impressive. The dollars are flowing in and a relieved government is looking at garnering over 50,000 crores from the sale of telecom spectrum, which was conducted this week. The inflow is just what was needed to get the fiscal math right. But what do these auctions mean for the telecom industry and the consumer at the end of the day?
Telecom companies are locked in an intense battle to grab as much spectrum as possible in the 900 and 1800 MHz spectrum band. There are 8 companies in the fray, including Vodafone India, Bharti Airtel, Tata Teleservices Limited, Reliance Jio Infocom Limited, Reliance Communications Limited, Idea Cellular, Aircel and Telewings Communication Services Private Limited. At the end of the 4th day, the Telecom Department has received bids for all 22 service areas in the 1800 MHz band and for all 3 service areas in the premium 900 MHz spectrum band. The joint bids of these companies stand at about 53,000 crore rupees. After the 4th day, bids for the 900 MHz band in Delhi came in at rupees 639.24 crore per megahertz, 78% higher than the basis price of rupees 360 crore fixed by the government. In Mumbai, bids stand at rupees 563.09 crore per megahertz, 72% higher than the reserve price. And in Kolkata, they were 54% higher at rupees 192.71 crore. The government attributes the good demand to the new licensing regime that allows telecom companies to provide services using any technology, rationalization of reserve prices and spectrum usage charges. The government conducted this round of spectrum auction following a Supreme Court order in the 2G case directing that all radio waves freed from the cancellation of 122 licenses in February 2012 should be auctioned. Krishnanand Tripathi's report, Rajya Sabha Television.
Himangshu, so straight away to the top story of this week. The numbers have been really dominating newspaper headlines all over the place, and it seems that the government is finally heaving a sigh of relief.
Yeah, it's actually a lot of good news on 2 counts. One, the government could not get too much revenue from the previous auctions, and there was a lot of suspicion, a lot of nervousness what will happen this time. So the going has been good as far as that is concerned. And for the industry, this is a very, very crucial, critical auction. On a few counts again. One is for 2 major incumbents, it's a question of survival. It's Vodafone and Bharti. They need to renew. Second, the industry is at a very interesting phase of its development. You've seen a lot of voice and SMS based growth for a couple of decades. And now data is rapidly catching up. And so all of them need spectrum. And after the previous controversies, so this is a very clean, transparent spectrum. So they bid, they get it, and they do business for many years. So it's good news all around so far.
But isn't there a concern already growing? I mean, we've seen the extent to which bids have gone. In certain circles, they're 60% above the base price, 70% above the base price. So, analysts are already worried doing their numbers, saying whether these companies are paying more than they can really afford.
Well, I don't think a company would actually pay more than it can afford. And they're also betting on the growth in the market. As I just said, qualitatively, it's moving towards a more data-based market. The number of Android phones, I think India is the fastest growing Android market. People are getting into applications, therefore data usage. And the moment you have more higher quality subscribers, companies would bet on it. And it's also a question of capturing the right spectrum, the right market share and number of circles. So it's money well spent, really.
Well, the auctions have also been very interesting because of the presence of one new entrant, new role, depends on how you want to look at it, but Reliance Jio Infocom. We all remember what happened when, Reliance Telecom or Reliance Communication as it was, later called, what it did to pricing and the kind of tariffs they came out with when they came back in the early 2000s. What do you think will the Mukesh Ambani Group's presence mean this time around?
See, they're a very serious player. They're a very big player, and they are a very determined player. As far as the Ambani Group is concerned, when it comes to a new venture, they have not had too many dramatic successes in the recent past. Barring their main brick and mortar refining, oil and gas. Even that's had some setbacks, and petrochemicals. So it's a very determined group. And yes, you're right. Last time they came, they came when we were paying 16 rupees a minute incoming, and that eventually came down to tariffs and paisa for outgoing and free incoming. So they want to be a game changer, and they're looking at a very broad set of applications. And they also plan to, for the first time, bring very high-speed data connectivity to the common man's mobile.
That is because of their existing 4G network, the airwaves which they've already bought.
Yeah, the airwaves they've already bought. And their style is big bang, come up with a very, very attractive product which nobody would say no to.
So are we looking at cutthroat pricing returning then to the telecom sector, which is, the consumer will rejoice because he's actually seen his telephone bill go up in the last 1 year or so. Will that reverse, you think?
I think it should, to some extent. At the very least, it will prevent further increase in prices for some time, because that will be a big new player waiting to capture the market. And that actually is a strategy for even, say, a big international player like Vodafone, that once you get hold of the spectrum and you grow, maybe the phase of low pricing is a cost to pay for eventually getting pricing power. If Reliance Jio really makes a big splash and captures people's imagination, people are already talking of, very affordable, very high-speed internet where, with the modern phones which people are getting, maybe with a click you can have a movie running. If that happens, they're going to capture a lot of market, and that would eventually lead to a greater pricing power. It's a huge market, even with, even with the current prices, even with the low margin, high volume game, the business is profitable. So,
well, Vodafone, Bharti, perhaps better watch out. Could be a very interesting year.
Yeah, I think consumer is the king.
Okay, quickly on this story, last point before we move on, just basically where it leaves the fiscal mathematics and the government. We saw that impact, or the auction impact was so significant that we saw it in the currency markets as well this week, because the hope was that a lot of dollar inflow will keep coming in, and then we saw a bond auction get cancelled, one of the government bond auctions this week. So there was great cheer saying that government's fiscal stress seems to be alleviated. Is this the right inference to draw?
I think it is, and that was one of the considerations with the government also, because say a year ago, India's fiscal situation was rapidly in a free fall, and there was serious danger of credit rating agencies giving India the junk rating. So, and that would have been completely disastrous, because there'll be a flight of dollars and rupee would sink, and you'll have to pay maybe 100, 120 rupees for a liter of petrol. So that's a very important thing to, and what these rating agencies were saying consistently was that you get your fiscal maths right, don't let things go out of control. And the reason they were not ready to change their outlook was that India was heading for elections. So at a time where people thought that there's going to be huge doles, huge giveaways, and they'll destroy the economy, you're actually getting this good news. So it's really very good for India. So
good for consumers, good for government, good for India. Telecom companies, we'll see how they deal with it as the year progresses. All right, on that note, we'll take a very quick break. But we come back on the other side and take the discussion forward. We talk about the cut in CNG and PNG prices. Welcome back. Here with Policy Watch. The government this week rejigged the gas allocation policy for various sectors. The new policy allows city gas distribution companies to meet their entire demand for natural gas from domestic production. The new policy could significantly reduce CNG prices in cities like Delhi and Ahmedabad, where the entire benefit could actually be passed on to the consumer. The move also comes at a time when the government was facing severe criticism from opposition parties and consumers over the high retail price of compressed natural gas.
The government is finally taking action to bring down fuel prices for the middle-class consumer. The Petroleum Ministry is doing this by meeting the entire supply needs of distribution companies in cities with domestic natural gas. The government's measure will reduce CNG prices by 15 rupees and piped natural gas prices by 5 rupees per kilogram in cities like Delhi and Ahmedabad. Moreover, it will also cut down its subsidy bill on diesel and LPG. The Indraprastha Gas Limited in Delhi was importing costly liquefied natural gas for up to 28% of its requirement, which is why last year in December, the Delhi government that has a 5% stake in IGL protested strongly against the 4 rupee 50 paise per kilogram hike in CNG prices. The current decision is meant to help the distribution companies by doing away with the need for any imported gas. But a city like Mumbai won't see any CNG or PNG price benefit since it was totally using domestic gas alone. The Petroleum Regulatory Board recommended expanding the city gas network in 300 areas of the country, but due to inadequate and inconsistent supplies, this couldn't pick up pace. However, with the new policy, lakhs of new consumers are expected to have piped natural gas connections and CNG for their vehicles. The government is already in process of awarding contracts for supply of CNG and PNG in 20 new cities. Krishnanand Tripathi's report, Rajya Sabha TV.
All right. So I'll ask you a simple, straight question. Is this politics playing over economics?
Well, it's a combination.
Okay.
I know a bit of politics would be there. But if you look at the broader thing, one of the many good things about this policy is that it is giving good priority to domestic city distribution networks. Because earlier what was happening was a lot of this city networks had to import LNG. Now that's a very erratic supply in terms of prices. For households, for taxi and auto drivers, it's very difficult to deal with their customers when their costs are going up and down, which happens a lot with LNG. Whereas for industrial
which is imported.
Which is
and
imported.
It's fairly costly as well.
It's costly and it goes up and down, and for reasons like, a severe winter in the United States or, a nuclear problem in Japan where they shut down nuclear and use more gas.
Sure.
So it's very difficult for households to be convinced that, okay, you paid 600 rupees last month, now you pay 800, next month you pay 700. Whereas for an industrial consumer whose gas supply will be diverted to kitchens and cars, for them it's much easier. They have hedging tools, they're dealing with commercial customers, so they can deal with this volatility. For a city gas network, no.
Okay.
The second thing, which is also very important and it's not been highlighted a lot in the same announcement, the government also said that as these networks import, more gas will be supplied to them. Now this is important because the Delhi-Mumbai example, particularly Delhi, has shown how much you can reduce vehicular pollution by shifting to gas. And there are some studies to show that the percentage of vehicular emission in overall pollution is much lower in Delhi than in tier 2 cities or many other cities which don't have natural gas. So it is important.
So now we're looking at a situation where most of the needs would be met through local gas or gas which is locally produced. So there's no variation of LNG prices, import, etc. for city gas distribution.
Yeah, not for a quarter at least.
But what happens when this so-called new formula of gas pricing comes into place? April 1, the price of gas is supposed to double, so we understand, from about 4.2 or 5 thereabouts where it is at different sources.
Roughly 4.2 to 8.4.
It could go up. So what happens then?
Well, then these prices would go up. There is one possibility, and one doesn't have much visibility and clarity on that yet, whether April 1 would immediately lead to a higher price, or April-June quarter is the one they will factor in to start giving the new price from July. That's a small possibility. So many people say it might be finally presented in a manner that it affects you in July. But whenever it does, and probably April, yes, prices would go up. But it would go up uniformly across all cities.
And then this would be a uniform price increase for all types of consumers as well?
Yeah, with this current policy, it would be. I mean, the Rangarajan formula which will determine the gas price applies to all.
So whether you're an industrial consumer or you are a transport consumer.
Domestic gas is the same price.
Or fertilizer.
The other thing for city gas, what was happening earlier, and that's, one of the triggers behind this government decision. Earlier, some cities like Mumbai were getting all their supply from domestic gas. Delhi was getting most of its supply from domestic gas. Whereas in Gujarat, which is India's biggest gas consumer, I think 1/3 of consumption is in Gujarat. It's that high because it's got a whole lot of CNG, piped gas and industrial gas. There, the city networks were counting heavily on imports, and therefore their prices were much higher than, say, the Mumbai price. Now, once you have everybody getting domestic gas, there is a kind of a uniformity in price, and if domestic prices go up, everybody's price would go up at the same time. And eventually, it's a question between the supplier and the customer. There will be an equilibrium, there will be an acceptability. And once that point is reached, then it's very good for the country that these gas networks will expand. They are heavily polluted cities. You go to a place like Ludhiana or Muradabad, inside areas, there's a lot of pollution, or these ceramic units, of course, many of them are getting gas. But if gas becomes the norm, acceptable norm, it's very good for the country. And one more point on that, India's exploration record has shown that you are much more likely to find gas than oil. So there is hope for domestic supply going up.
Whenever there's energy security, we talk about it, there is always some element of politics or controversy that always goes with it. How does this year look? Because there's a lot happening. We know the whole case that's ongoing as far as the KG basin is concerned with Reliance and the arbitration, this impending price increase and moving towards a uniform structured formula. How are we looking in terms of just having adequate gas to meet the country's requirement this year?
See, this year, the good news is that most of this controversy, we are at the end of that, phase of pain when, the biggest gas supplier had huge regulatory issues. A lot of those issues have been sorted out. But what you've lost is a couple of years of approvals. So some gas fields which could have started producing maybe 2015 have now been pushed back to 2017. So the real increase in domestic gas will come around 2017-18. And the other thing it does is, once the gas price goes up, as it would, there is a pain, there is discomfort. But it makes it much more attractive for companies to look for gas in India, and which is the good news. Many people talk about the shale example in US. Shale prices are currently around $5. They had come to $2.50 earlier. The reason it happened was that when prices were up, US had allowed the prices to go up till $12, $14 a unit. Consumers were not happy, but the moment it went there, so many companies found it worthwhile to invest in new technology on shale rocks, which was not commercially viable. The moment that happened, the supply increased, and today, it had come down to 3. They have a very bad winter and a lot of heating demand, so it's gone up to 4.95. So, there are good sides also to a higher price, to the extent it makes it more attractive to extract more.
So typically you start finding suddenly from the wells there's more gas coming out, suddenly you find as soon as the price goes up. Okay, something to do with that. All right, we'll take a very quick break on that note. On the other side, the 7th Pay Commission has been announced. What will it mean? We'll come back with details. You're with Policy Watch. This week, the government named members of the 7th Pay Commission. It had announced the Pay Commission last September. The Pay Commission is now expected to give its recommendations over the next 2 years. Let's take a look at this report.
Good news for the central government employees and pensioners. The government has set the ball rolling on the 7th Pay Commission that will review their pay scales and working conditions. Retired Supreme Court Judge Ashok Mathur will head the panel, while Petroleum Secretary Vivek Ray will be a full-time member. Meena Agarwal from the Finance Ministry and Ratan Roy, the Director of NIPFP, will be the other 2 members. The government is yet to disclose the terms of reference of the commission.
Apart from reflecting the changing economic circumstances, the increase in prices, the appropriateness of the compensation, it looks into the broader issues also which are expected from the Pay Commission.
Pay Commissions are set up every 10 years to review the working conditions for 80 lakh central government employees. The 4th Pay Commission recommendations were implemented in 1986. The 5th and 6th pay commissions followed in 1996 and 2006. The government hopes to implement the 7th pay commission from 2016.
The government has announced the constitution of the pay commission, but a lot would depend on the terms of reference which it formulates for the pay commission as a whole, which has yet to come out.
The 6th pay commission raised increased salaries by 21%. It cost the exchequer 18,000 crore, besides an additional 30,000 crore in paying out arrears. Krishnanand Tripathi's report, Rajya Sabha Television.
So Himangshu, again, I know people start reading politics everywhere. I guess it's election season. So is there any link here at all? Do you think it even has a bearing, the fact that they've announced a commission 2 years ahead of the actual stipulated deadline?
Well, I think there is a link, but I'll say it's a permissible link because they haven't actually announced higher salaries. This pay commission had to be appointed. It's every 10 years. That they've done it now is, I think, there's a political consideration, but there's no political cost. I mean, there's no cost to the economy for a timely announcement, I think.
You know, going by the previous example, the 6th pay commission became such a huge milestone, such a benchmark because of the, you know, number of things that happened, including this 21% increase in salary itself. So expectations would be riding pretty high on the 7th commission, you think?
Yeah, they would be. But one of the things that happened in the previous pay commission was the timing. You know, that was a time when Indian economy was growing pretty well, corporate sector had really expanded, salary had gone up and government was really lagging behind. Now this commission is coming at a time when the economy is not doing well, corporate sector has contracted, so you know, there's not all that much gap. The other thing which I think the pay commission needs to bear in mind is, you know, you cannot simply, whenever the recommendations come out, you cannot simply have a huge dole out. Because if you see the public, the media, it's getting very, very disapproving of, you know, handouts. You know, for so many years you've had MPs traveling around the world on various committees, but now if somebody goes out, you'll have reports all over that, you know, there's fire in your constituency and you are junketeering. So I think for public acceptability and given the high maturity of the public, you know, you've moved from one of the least developing countries to a, you know, one of the most attractive markets.
For some 80 lakh, I think, servicemen and pensioners, you think there would be that feeling of really looking at prudence and whether the government has the money to give out this kind of an increase or bonanza?
Well, what happens in a pay commission is that, you know, till it goes to the political authority, everybody who approves it gains from it also. So,
Okay. But just typically looking at the way, you know, how the commissions have been constituted in the past and the sort of route they take to come to a decision on the recommendations, how much strength or how much weightage is really given to fiscal prudence or basic mathematics of the government, how much money the government has? Does that even count, or is it just a pure political decision?
It does count. It does count, and finally, you know, it's the finance ministry and the budget and everything. It is looked at, but broadly, the idea is that government, you know, it claims to be the ideal employer. It should pay its employees properly to keep their morale up. So that consideration is there. Fiscally, of course, they look at it, but at times, you know, it depends when it has to be implemented and recommendations are announced and there's an election 6 months down then, that might be damaging for the fiscal situation. So.
Okay. Are there any finer points you would be expecting or you'd want the commission to perhaps consider or keep in mind this time, apart from the headline increase in salary?
See, they'll have to look at the overall staffing situation, whether certain ministries, the size of the government needs to be trimmed, whether you can do a bold thing like, you know, linking maybe a part of the package to performance. And plus it has to, you know, it'll be very difficult to do in government, but maybe at least start a debate on that.
Like a variable pay structure.
Yeah, or if, you know, if you've got 10 joint secretaries and one is working hard and coming up with great policies and the other one is just sitting over judgments, maybe if there can be some reward of somebody who takes initiative. So, I mean, those are things that will have to eventually come as, you know, the economy matures and standards of living and education goes up.
So, quick point on this. Would you draw parallels between the times when we've had pay commission reports come out, or actually the actual hikes come out, and the manner in which we've seen consumption patterns change, particularly perhaps in sections of urban India? Was last time just a coincidence that the economy was doing so well and then the 6th pay commission report came out and then we just kept on seeing this great consumption boom? Was it just coincidence? To
some extent it depends on when the report is implemented. at times if it gets delayed, it gets retrospectively implemented, and then these people get, you know, many months of arrears. When that happens, there will be a consumption boom, because, you know, you've lived your life those past 6-8 months or 1 year in normal, and you get paid for that. So there is this excitement people like to consume.
So the arrears lead to the boom.
Yeah, arrears, or at least magnify the boom. In any case, there would be some increase in day-to-day consumption, because especially in government, you're pretty sure how much your salary is going to be this year, next year, when you'll get promoted, and you'll know you'll be getting this much more. So there would be some consumption. But if it is delayed and with a lot of areas, then there could be that sudden jump which will last for maybe a couple of months.
Well, I wonder if the government can now say that we are looking at a generous payout because it will be good for the economy. I wonder if that's even a possibility in terms of a line to take.
Yeah, it depends. You know, at times these kind of things in a particular phase of the economy can kickstart consumption, and then that can trigger a cycle of, you know, if you're buying more goods, then they will buy more metal and basic capital goods, and therefore they will employ more people. So it can trigger a cycle which can have good effect. But at times, you know, if you're giving out too much, your fiscal deficit is not controlled, and that can do quite the reverse. So there will be some fine tuning and balance.
Balancing act. All right, Himangshu, great to talk to you this week. Thank you for taking out the time. That's all we have on Policy You Watch. Thank you for being with us.